The enthusiasm after yesterday's consumer price index print didn't last long. We saw stocks come off of their highs later in the day, and the perception is still that the Fed is going to stay the course, at least for now. Let's talk more about what to expect from the Fed today and beyond, and what it means for stocks with Veronica Willis, Wells Fargo Investment Strategy Institute Analyst. Good to see you. So as we are looking at what we might hear from the Fed today, what clues are you looking for as to the future direction?
I think what we're going to look really closely at is what does Chairman Powell say about the future course of Fed monetary policy? We're expecting that he's going to maintain that the Fed is committed to getting inflation back toward the 2% target. And even though we got a softer inflation report than what was expected yesterday, we're still far away from that 2% target. And so we think that Powell is going to, remain committed to that messaging that they want to get inflation down back to that target.
And so does that also mean that even if we do see a pause in 2023 at some point, that we could still see, even after that pause, incremental hikes, depending upon what the course of inflation does look like?
Yeah, I think it's really dependent also on what happens with the economy in 2023. We are expecting an economic slowdown, and with that slowdown, we're expecting inflation to also come down. And so if inflation comes down like we expect during an economic slowdown, after a Fed pause, they may not need to resume raising any rates after.
Do you have any big, or you and your team have any big contrarian calls investors need to be on the lookout for?
I think right now we are still recommending a defensive positioning, preparing for an economic slowdown, really being cautious within equities, shifting away from things like small cap into large and mid cap stocks where they can weather kind of an economic slowdown a little bit better, still favoring the US over international. But I think, within fixed income, we don't want to abandon that altogether. It's been a really tough year for fixed income investors, but we think right now is a good time for those investors seeking income to lock in these higher yields as we start to approach peak yield.
So how many months do you believe the Fed will be looking at to really constitute a trend that we're moving in the right direction? Or how many readings, I should say?
I think they probably want to see sustainability for a few months in various different measures of inflation. We've seen CPI coming down pretty consistently for a few months, but last week we just got a hotter than expected PPI report. And so the Fed is looking at all of these different reports for inflation. They're looking at CPI, they're looking at the personal consumption expenditures, they're looking at PPI as well for all of the trends, for all of the different ways that inflation kind of feeds into the economy. And so I think they're looking for all of those measures of inflation to start trending lower over a course of a few months.
And we'll see if it happens. We're all crossing our fingers too for various reasons. Veronica, good to see Veronica Willis of the Wells Fargo Investment Institute. Appreciate it.
Thank you.